Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in this week. We can be seen this week as well as other weeks on YouTube. If you go to YouTube, Jeff Barton, the Mortgage Voice. We're also on a number of different radio stations from Albuquerque up to Las Vegas, in the Inland Empire, and certainly up in Lake Tahoe. All these fine stations we've been on for a number of years, and we really appreciate the feedback we get on the information that we provide. We try to provide information that's useful, somewhat entertaining, and we know you're driving around usually on the weekends and flipping on that AM radio. But you can also reach us through our podcast. We're on the Big 8 podcast. Daryl, I think, has a list of those podcasts. Is that right?
I sure do. It's Apple Podcast, Google Music Play, Spotify, Spreaker, Stitcher, iHeartMedia, Radio.com, and of course the infamous YouTube.
Yes, thank you very much. Also, we do a Mortgage Minute. It's really Mortgage 5 Minutes, but we call it the Mortgage Minute. We do it on LinkedIn and Facebook every day, as well as sometimes we get over to Instagram and Twitter. It's funny how people, and Daryl, maybe you understand it better than I do. Some people enjoy a certain social media over others. And I know in business, I seem to see it really by industry. I know a lot of realtors use Instagram, whereby a lot of podcasters use Facebook, and a lot of just straight ads are up on LinkedIn. What do you think is the best way to reach people in any business? And do you see one over another being more effective?
I do. I think Facebook is still a dominant player. People say they get 70% of the people say they get their primary news source from Facebook. And I really think that LinkedIn is a B2B network.
Right.
It's
right.
business.
Yeah. What's that?
People expect to see ads or be pitched something on LinkedIn, where on Facebook some people get offended. Oh, you're trying to sell something. Well,
I get.
Or is it they say nothing happens until something's sold?
It's funny you say that, because I mentioned to a friend of mine who is also, she's been on the show a couple times, a designer. And I mentioned to her that, how come she doesn't do Facebook, or why do you not do? And she says, well, I do Instagram. I go, well, I realize that, Instagram's great, but aren't you missing some of the people out there who you might be able to? And she got offended. She was like, what do you mean? I was like, geez, I'm sorry. I didn't think it was such a strange question. For instance, our show, we try to hit it all, right? We try to expand what we're doing. We try to bring in more people. We try to collateralize each one with the other, and hopefully get likes and people that say they want to hear more and sign up for whatever social media outfit that we're on that particular day, because we know that when you need a mortgage, you may be on any one of these things. So it's surprising to me to hear her have such a visceral response to what I was talking about. I don't know, like you were saying.
Yeah, I really think that a lot of people think Facebook is just for fun and has nothing to do with reality for the most part.
Well, speaking of reality, we just passed through the twilight zone on the last election, which still has remnants of that alternate universe hanging around. And I, again, listen and go to many of these social outlets. And the reason I'm talking about all this and how you get your information is to try to make people understand that when we're talking about mortgages, and we bring guests on the show and they talk about real estate or mortgages or some way that the rates that day are affected by other events, it's news. We're talking news here. I have some opinions, but zero opinions. So if you're used to going to a Facebook the alternate reality universe that Facebook can sometimes be, especially in the political realm, that our information is pretty much no nuts and bolts. It's a little dry, but it's what it is in terms of how you can get the best rate, what are the best programs, where can you go to get help. These are the type of things that are important to people getting a mortgage, whether you're on Facebook or LinkedIn or Instagram or Snapchat, or what are some of the other ones? I don't know. There's so many out there.
The list just goes on. By the time you or I get familiar with one of them being, baby boomers,
Right.
the rest of the world has moved on to something else.
Now, I have a question for you again. Now, we reach different demographics and people, and a large part of the people who come to Malibu Funding and or listen to the show are Spanish-speaking or first or second generation Spanish-speaking immigrants. And there's a term out there which I've heard recently, which I have no idea what it means. It's Latinx. What is that? I've never heard of that. Do you know what it is?
The first time I heard it was just now.
Okay, Latinx is apparently, and I heard,
Hispanic,
again, what's that?
Hispanic Gen X's?
It's possible, I mean, that's a great guess. But I heard it, and I heard it on NPR, and I was like, what the heck is that? And then I heard somebody else saying that, no, that's not a term. That's used by a certain, group of people who know nothing about it. And it already had become something more than I just got introduced to the term. So if I'm behind the times on what should be or shouldn't be used for certain groups, forgive me. I'm not an old guy, but I'm not a young guy either. I'm used to, viewing people pretty much as they are. And in the groups, in who we lend to and how we lend to it, that's how we're supposed to look at people. Now, on the 1003 is a loan application. Everybody out there who has done a loan or is about to do a loan, refi or purchase or investment, you're going to fill out this loan application. On the loan application is a bunch of information about you, the property, how much you make, your credit score, your debt obligations. All of this stuff is a formula that they come up with. Either you're approved or you're not approved. And then they add conditions on top of that. Now, on page 8 of the 1003 or the loan application are demographic information. Our demographic is demographic information about you. Now, you don't have to fill it out, but your loan officer does. It's a requirement that information is put down there. I often think that the demographic information on a loan application is in of itself a way by which people who decide who gets a loan can use against you. For instance, if you're in a discriminatory bank and you don't want to lend to a certain group of people or in a certain area, or however you look at, discriminatory lending practices, the first place you're going to go is the demographic area. What kind of people are these? Are they of a certain group I don't like? Are they of a certain religion I don't particularly like? Are they from a certain area that I don't particularly want to lend in? And so that information is in the demographic information. So it becomes problematic for me, and this is my particular viewpoint of it, and other people have different viewpoints. Obviously, if we're seeing that fewer and fewer people from a certain group are getting loans, that's an issue. And so back in 08, what happened was, or 07, really 06, there was a push to improve lending in areas where we saw, or the industry saw, that there was less and less money available, especially when there was more and more money available to everybody else. And what happened was that there was a requirement placed on, lenders to go out and lend in those areas. Well, it later became a political football like everything else does, that yes, you people told us to lend to them, and look what happened. The entire economy imploded and the mortgage meltdown happened. Well, I don't know if that was because we lent to the wrong people, or if the lending requirements, the requirements to get a loan were so strict, were not so strict, and so anybody got a loan? Or was it the Fed giving us too much money and therefore we had to lend it out? Or was it a distraction from the wars that were taking place so that people would rejoice in the free money and not pay attention to the war in Afghanistan or in Iraq? All of these theories, however it works, I always think about that when we talk about how to reach people and where people are. Anyway, I'm Jeff Barton. I'm your voice in the mortgage industry. Thanks very much for listening, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for listening. Each and every week, we bring to you interesting guests as well as information on mortgages, on the process of getting a mortgage. You can hear us here. You can go to YouTube, Jeff Barton, the Mortgage Voice. We're on 5 radio stations, 3 different states. We're on the Big 8 podcast, all major podcasts. You can go there. All the shows are archived. You can see us too. A couple of stations carry a video feed. Obviously, YouTube does as well. And let's just get right to our next guest. He's a guy that's been on the show once before. We enjoy having him on, and he's going to talk to us a little bit about what's going on for Blue Point. It's Tuan Nguyen, and again, he's from Blue Point Mortgage. Tuan, how are you?
I'm doing good, Jeff. How are you doing?
I'm fine, thank you. You know, it was a long time. I hadn't heard from you for a while, and then I get a great phone call, so I appreciate you picking up the phone, and here you are now. You're on the show. Thanks a lot.
You know how it is a small world in this industry, sir.
Yes, it is. It's a very small world, and if you're around long enough, and the company Malibu Funding, who sponsors the show, we're on our 20th year already, and it seems like yesterday. And so, you just see the same people keep coming up and around again and again, especially good people like yourself. How do you like it at Blue Point?
I love it. The culture there is really good. I see everybody there is really trying to, with the ops, everyone's trying to really just get loans funded and make everybody happy. Everyone can make some money.
Good to hear. All right. You see what's going on in the market. What is happening with, I guess, the first thing is the programs there. What are you guys specializing in order to obviously bring more home loans to consumers, maybe help out some purchase? What are you doing? And
for one thing, we're usually giving specials. I think right now we have a November special. They're giving 3/8 for any purchase deals. Right now we are price leaders on the 30-year FHA loans, as well as we have this program called Blaze. Those are for your 720 W-2 employees. We have a little bit of pricing on those as well. And we're pretty much just regular conventional loan, govy loans right now. Very competitive. The non-QMs, we did do those. Eventually we will get those back. But we're just trying to focus on what we're good at right now.
Okay, let's talk FHA for a second here. Obviously, when rates start going up, and I'm predicting they probably will go up, at least some, it's going to knock a bunch of people out of the affordability range, which, again, will bring up FHA and their 3.5% down as an advantage. Give me your understanding of that particular aspect of the market, and then what are the rates that you guys are bringing these loans in? I mean, obviously today's rate is not tomorrow's rate, but give us an idea of what it is.
Yeah, well, with the FHA, as you know as well, as the rates go up, they have to be able to qualify for more, so that the income ratio, will be a little bit higher. So we have to use these types of programs to get them qualified. Definitely with FHA, those type of rates, you're looking at. Let me just take a look at today's rate sheet here. You're looking like it's about 2.25 on the standard FHA.
That's good.
And that's a pretty good still rebate there of almost 2 points, 1.9.
Now explain the rebate on a mortgage broker deal.
As conditions change as well, we as Blue Point, we definitely do try to adjust as the market adjusts. As like I say, if we're trying to get more purchases in with those we'll throw these specials like 3/8 specials out, trying to get more of those business in.
Now, Tuan, explain a little bit about what rebate means to a mortgage brokered customer. Because they hear that term and they go, well, what does that even mean? I know what it means. Can you explain a little bit about how that helps in a credit to the borrower?
Yeah, a rebate is credit to the borrower. So certain rates you can get credit towards your closing costs, fees on your loans as well. So say, and that you can use that to your advantage as well. So say on a loan that maybe possibly you qualify for 2.25, but it has, a couple $1,000s in closing costs, you can take a little higher rate as well and get more rebate and make it pretty much like essentially a cost-free loan as well. So, you have your different borrowers that, like I said, they're more conscious on rate. One of them is more conscious on cost. So that, you have that advantage. And if you understand the way the rebate works, you can use that to help sell your borrowers.
I want to give you a quote from Lawrence Yun, who is he's the chief economist for the National Association of Realtors, talking about affordability. He says, affordability will not improve even with low interest rates. Housing prices are increasing much too fast. What are you guys seeing in regards to that? And how do we as an industry, how do we, you and I over at Blue Point, how do we solve any of these problems? Is it FHA? Is that the way to make it more affordable?
See, with the FHA, that's not going to, I don't foresee that, with the pricing of the market. With the pricing of the market, it has to, like I said, at the end of the day, as a company, all we really try to do is just try to make a little more congruent on our appraisals, make sure that, these values are coming in at true values, because, appraisers that come in and do different values that are a little higher, that it kind of inflates the value as well in the market. So as a consumer, like ourselves, if someone else is doing a higher appraisal as well, the next person that comes in and buys, they're going to be paying a lot more as well. So, as a company, we definitely look at our appraisal a little more stricter, kind of see, do our comparables as well to make sure that's what the current market is.
Do you see the lending restrictions or lending guidelines tightening? You talk a little bit about the appraisal being that way, possibly as a tightening mechanism. But when we get to these ends, or this, whether it's overinflated or whether it's a bubble or whatever they call it, lending becomes more conservative as we get closer to the end of the boom. And I don't know if we're near the end of the boom, the refi boom, I mean, whether rates are going to go up. And if that's true, yes, we are at the end of the boom. But do you see this as the beginning of the tightening, or just kind of the general maintenance of how you at Blue Point see doing loans?
I see that as more of a general maintenance.
Right.
At times when you do so much loans, you kind of get off track a little bit, do a little more lax.
Yep.
And a lot of times you do a little more lax, you can get a little more errors, things that can come back to you as well. So, it's like a spring cleaning. Sometimes you have to do that spring cleaning in order to get you back to where you need to be.
I like that answer, because I think that's true with a lot of us in the industry. It's been so busy that it's been very difficult to maintain the integrity of every department all the time. So to tighten from time to time, to take a breath, is probably a good thing for each and every lender.
Most definitely. I definitely agree with you on that.
Where do you see rates heading New Year?
We all hoping it stays the same so we can make good money.
Yes, we are. That's very true.
I'll be honest with you. It's been like this the last 2 years. They always say the rates are going to go up, but beginning of the year, and it sustains. It goes up a little bit, but then it flattens back out by, the second quarter. So, I don't see it really, going right back up until something kind of drastic kind of happens,
Yeah, I agree with that too. And you're saying that Blue Point might get non-QM back to increase the pool of borrowers that you're dealing with. But right now you don't need new borrowers. You're probably at capacity already.
Yes, like I said, we stick with what we're good at. You try to do too much in a time that like this, you're not going to do well. So.
Yeah, I agree with that. Twan, you want to shout out your phone number for people who want to get in touch with a terrific person who knows a ton about what's going on in the loan business?
Definitely. My cell phone number is area code 626-221-5151. If I don't answer, you have to leave a message, or you can even shoot me a text. I can respond right away.
Twan, thanks very much for coming on again. I really appreciate it. And we'll do some more business, I'm sure, very soon.
Definitely. Thank you, guys. You guys have a great day.
You too. And that's Twan Nguyen from Blue Point Mortgage. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in. If you want to listen to the show, you certainly can do so when we air on broadcast radio. We're on 5 stations in 3 different states. But we can also be heard on our podcast. We're on the Big 8 podcast. Daryl, do you have the list of those podcasts for us?
I sure do, Jeff. It's Apple Podcast, Google Music Play, Spotify, Spreaker, Stitcher, iHeartMedia, Radio.com, and YouTube.
And if you go to YouTube, you can see this. We shoot this for video. A couple of the stations carry video feeds. And we have hundreds of shows there. And recently, we've also begun, the channel is Jeff Barton, the Mortgage Voice. But we've recently begun to do some LinkedIn, YouTube, Instagram type videos on a daily basis. We call that the Mortgage Minute. That's there too. We bring to you great guests, people with information that you're going to be able to use immediately, or at least ponder to make decisions about mortgages or how you're going to reach people in the future or now. One of the guys that I've worked with for, 10, maybe 15 years is Vince Cano. He's a guy that runs a terrific company called High Definition Video King, HD Video King, out of Las Vegas, Nevada. And he joins us today. Vince, how are you?
I'm good, Jeff. How you doing?
I'm fine, thank you. And thank you for doing this. I will sing your praises once more before I ask you a question. Anytime I have a video issue or question, I usually ask Vince. And why is that? Because he's not only an Emmy award-winning guy and been doing this a long time, but also does it in such a way that it's easily accessible to anybody who knows nothing. And that's me all over. So Vince, thanks very much once again. How are you?
Good. Thank you, Jeff, for having me.
Okay, great. All right. We're in COVID. Obviously, we've been there about 9 months. It's changed a lot of things, the way people live, the way they do business, whether it's online, through Zoom, or any number of other ways. You have a video series, or at least some explanatory things online, teaching people how best to be able to reach consumers, customers, or however they want to, using their cell phone or using different methods. How are you seeing this change, and what's the best method by which somebody who knows nothing can get into this and start broadcasting what they want to say?
Well, Jeff, this thing is a little crazy. Last year, last I checked, 80% of all internet browsing was video, and now with COVID, I'm pretty sure it's gone up. And a lot of businesses don't realize that. Remember Kodak? Remember Toys R Us? They didn't want to go with the trend, and they went out of business. So it's very important for all businesses to start communicating through video.
What's the most effective way on a budget to do that?
Well, it's as easy as using your own phone. I did a video where I teach them how to set up something for less than $300. And what's most important when you're trying to communicate with your clients is your voice. So you need a good mic, and you need good lighting so that they could see you. And that's pretty much it.
And you can do this all for under $300.
Well, you could do it for less than $300, but on my video, I chose a little bit better mic and a little bit better light. So like I said, if you have a well-lit room and you have a good mic so that people could hear your message, then that's more than enough.
Now, let's talk about message for a second, because I think that's part of the marketing effort, that you can also bring some expertise with it. I know that you've done extensive research on the subject of how to get your message to people, and then where are your people to find to be able to deliver that message. How would you say that that is, the thing that you do, and how would somebody like, I guess, myself or other types of businesses know the people they want to reach and how to reach them where they are? How do you find all that out?
Well, Jeff, like I had a few of my customers come up to me and say, "Man, your video was wonderful, but I'm not getting any results. What's going on?" And what they don't realize is that, yeah, your video is just like a business card. It could be the nicest business card, but if you don't pass it around,
Right.
if you don't do the work to pass it around, nobody's gonna know. So you really need a good marketing company, somebody that knows what they're doing and is able. Because it's almost like fishing, If you're gonna go fish for sharks in the ocean, you're not gonna use the same bait that you're gonna use to fish trout. You got to know who your client is, the demographics, female, male, age range, and then you got to find out where they're at. For example, like, if I'm doing, if you're doing real estate, a good place to market would be Facebook, because that's where all the people, your clients, are going to be. If you're doing business to business, LinkedIn would be a good place to go. So, those are the things that, a good marketing person is going to have an idea, and even though they know or they have a good idea, you still have to test.
No, I agree with all of what you're saying, and because earlier in the show we were talking about the different places that obviously you as a company can go to, whether it's LinkedIn or YouTube or Instagram or Facebook or any number of the rest of the places that you can go in order to get your message out. And you're saying with specific industries, you can identify pretty much where those industries are going for the information, or do you shotgun blast everybody?
No, there's specific industries for certain. So, for example, we did a marketing campaign with a set of twins who had 500,000 followers. The company, It was a gourmet donut company here in Vegas that sold donuts for like $4 or $5 each. They made over 2,000, and they sold them all in less than 2 hours. So there's so many different avenues to do your marketing, but if you don't know what you're looking for, at least get on your phone and put the word out.
Okay, very good. Messaging. How do you develop a message?
What do you mean how to develop a message?
Well, let's say I'm a company, I got a product or I have a service, and I know where to go, but in terms of choosing what to say and how to say it, how do you come up with that?
Well, you got to figure out what you actually do. So, like my company, I do videos, but I don't do videos. I specialize in telling your story. So you gotta just saying I do videos it doesn't send the message of who you are as a company.
Right. I agree. So developing that, is that part of what you do for people? Is that part of how you help? Because I've seen a bunch of your videos. You have a series of boxing videos out right now with the gym there in Vegas. Terrific stuff. Really is in compelling. You want to watch more of it. And you don't really notice you doing it. You notice the guy and what the guy's doing. And that's what I liked about it.
Yes, I have a YouTube channel called Fit Builders, and I'm trying to do it for all the sports and athletes. But right now we started with boxing, and it's a nonprofit boxing gym in Vegas. Is one of the best gyms, and a lot of people don't know, but they're out there. They're out there trying to help kids that don't have money, and they're trying to get them off the streets and teaching them a skill. So their model is, we're teaching the science, not the violence. So yeah, if you want to go to YouTube, check out Fit Builders. They it's a couple. They're ex police officers, and they're
Hmm.
very already older people, but they really need the help. If anybody wants to help out, go to the YouTube channel, find out where they could help. So you're basically helping kids. That's what you're
Hey,
doing.
thanks, Vince. Could you tell people how to get in touch with you? You just have so much information and the ability to help. How do people reach you?
Well, my cell phone is 702 or you could go to Instagram. My Instagram is at HD Video King. So HD Video King on Instagram.
Vince, thanks very much for coming on. I really appreciate it. Great message and obviously a ton of useful information. Thanks very much.
Thank you, Jeff. Appreciate it.
Thank you. And that's Vince Cano, and he's from HD Video King. I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for listening, tuning in, seeing us, hearing us each and every week. If you do go to one of our many places where you can see the show, you can go to KMET, KCAA, both of those places, or you can go to Barton, the Mortgage Voice is my YouTube channel. Click on that you like it, that you love it, that you want to hear more. Why? Because it spreads the message of what we're doing here, which is informational radio, and bringing you options about what you can do with your loan, with how you're going to get a loan, if you can get a loan, what's heading in the market, what's going on with mortgage interest rates. But I really don't have all the answers. I don't have any answers. But what I do have is great guests. One of the great guests who comes on the show all the time is Connie Hernandez from PMA Mortgage. I really appreciate her. Once again, back on the show. Hi, Connie. How are you?
How are you, Jeff? Thank you for having me on.
Thank you very much for coming on. We were just talking off air about the adverse, what do they call it? The adverse marketing fee or the adverse something fee that they're going to tack on to each and every loan, starting, I guess, with loans locked after December 1st. Is that right?
Correct. Actually, some of the lenders, if you're brokering loans, have actually accelerated that, and
Yep.
I'm pretty sure that a lot of people didn't appreciate that. But with that being said, I have to kind of share. I don't know if this is something that I just came across with about recently, but some lenders, I believe, in order to be competitive, are actually giving a credit. But of course, you've got to check all of the hits for FICOs and LTVs and what have you. But some are actually advertising that they're doing a waiver on some of those fees. So it'd be probably a good opportunity to really do some research before you make a decision as far as your loan goes.
Now, most lenders have tightened their requirements on loans recently. And I don't know whether they think that the market itself is becoming overheated or whether they're just trying to slow down their own business because they're too busy. But combine that with what you were saying about checking all the boxes in order to get this credit. How many people are going to qualify for a reduction in those type of fees? And what kind of fee is this that people are going to have to pay, and how is it disclosed?
Well, the 0.5% fee, and I believe we're talking about the 0.5% fee.
Yes.
to the normal fees in the market, correct?
Yes.
Well, I've read a few opinions from different areas in our market in regards to what their opinions are of this fee. And as you and I both know, the rates are at an all-time low, lower than I think we
Yep.
ever expected them to be.
Yep.
So, a lot of things have changed in the industry, such as, our adjustable loans, even though our area doesn't really have a lot of adjustable loans right now,
No.
but those loans are changing. And I imagine that the fee that we're seeing is just a result of just the strain that is on the banking system, where there may not be enough money. What's the easiest way to put it? Enough meat on the bone for everyone? Is that a good way to put it?
Yes, it is, and it runs contrary to what I've also read, which is that it is done because they're thinking that the market may turn south and all of these loans that are marginal are going to go bad, and so they need a big cash reserve if they're about ready to release the GSEs from FHFA conservatorship. I don't know if that's a lot of double talk. I like your explanation better. It's just simpler. People want to make more money, so they're charging more.
Right. And I mean, they're always going to give us reasons why they need to add an extra fee here or an extra increase or a higher requirement for FICO in order to get the better rate. And it is true, there are fantastic rates out there, but as you
Yep.
and I know, they're not for everyone. If you don't have the perfect score, the perfect income, the perfect value on your home, chances are you're not going to get those really super low rates.
Right.
And unfortunately, everybody wants them, but not everyone can have them. At the
Right.
same time, these additional 0.25% or 0.5% rates that are being added to the current market rates are a cushion. And, it could be because, I have my own opinions or thoughts about the ideas behind it. Potentially, maybe there's just going to be a huge issue in our markets when
Right.
that have had their payments deferred. Now, some lenders may defer them to the end of the loan. Many others will not. People are not going to have 6 months of payments, ready to be paid at the end of 6 months. What's going to happen to them?
I agree with you. I think this is, well, my own opinion is that whoever's in the administration, the White House, they're going to kick this down the curb. They're going to give another 6 months extension to the forbearance, which I guess is supposed to come due December 31st, right?
Correct.
Right. So I think, regardless, obviously it'll have to be the current administration to be able to give this extension unless they say no. I mean, there is, in typical political style that we seem to want to make these things very tense and irritable right up until the last possible second, but it's possible they won't extend it at all. And then exactly what you're saying is true. What's going to happen to those borrowers?
Well, you have to kind of wonder, how long can you really stretch that rubber band?
Exactly, but I know Washington as long as they want. I mean, basically, they'll just tell the servicers to keep paying. Sorry, I mean that's the way they look at it.
Yeah, and the institutions that aren't receiving any payments.
Well, no, the servicers are required to pay them. It's the servicers themselves that aren't going to get any payments. Now I don't know how they're handling it, but a lot of them, have cash reserves and are able to, float it until. And you're right. I don't know how long that's all going to last and how long it's, I guess basically until the vaccine's out and people start hiring, restaurant workers and low to mid-level employees again, because that's really who's struggling here, right?
Oh, so many people are struggling
Right.
with all of this, and the list is so long. But again, to answer your question, maybe that 0.5% is going for those reserves for the what ifs. There's
Yeah.
a lot of what ifs.
Yeah, there is. Okay, what are some of your I guess more popular programs that you're currently doing? You're doing refinances, but what kind are you doing? You doing 30-year, 15 years? You doing an FHA streamline? What are most of your loans? What are you doing right now?
We're doing a lot of 15 and 20-year loans
Okay.
from that maybe have been in the system now for 25 years or so. And at this point, obviously, if they had a high 4 interest rate and now they're able to get like a 2.5, and their payment might be very close to what they were paying, if not just maybe a little bit higher, it's totally worth their while to bring their payments down to 15 years. So we are getting a lot of lower years as far as the refis that we're looking at. I'm also getting a lot of purchase loans still. You know, there's still a lot of people out there buying because the rates are just kind of too hard to resist. Is that the best way to put it?
Yep, I agree with that. I think that one of the things, and reading into some of these comments by a lot of the people who run our business, this guy Lawrence Yuen, who is the guy who is the chief economist for NAR, his quote is, "The affordability situation will not improve even with low interest rates. Housing prices are increasing way too fast." Do you think that affordability gap, i.e. that the prices are raising faster than the rates are lowering, do you think that that's true in your area?
I think it's true of many areas.
Right.
You know, areas where people were willing to drive an hour to buy an affordable home, it's no longer affordable and within an hour's reach. You know, you have to drive out further to really get into an affordable home.
Now, yeah, and so you're talking up to 15, right? I mean, for those of you who are not familiar with Southern California, the 15 is the road that goes out to Vegas from the Inland Empire, which is, you know, approximately 50, 60 miles from the ocean, Los Angeles.
Correct.
Yes, you're talking Hemet, and you're talking, I don't know.
Empire used to be affordable, no longer affordable.
No more. Oh, wow. Okay.
No longer affordable. So any which way direction you go in, you have to go at least an hour and a half out of the main cities to start looking at affordable homes.
Unbelievable. Connie, could you shout out your telephone number for people who need a very experienced and thoughtful person to help them with their loans? That'd be great.
Thank you so much, Jeff. Yes,
Sure.
this is Connie Hernandez. You can find us in downtown Covina. We're at 101 North Citrus. The best number to reach us would be 626-422-2017. The office number 626-918-2419. We're here to help answer anyone's questions. I know it's a very confusing time for all of us, but with with God's help, we can get through this and hopefully not come out of it too badly.
Connie, thanks very much once again to come on the show. That's Connie Hernandez from PMA. I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Welcome back to the show. Thank you for listening each and every week. We're on the Big 8 podcast, major podcast. There's 8 of them. And we're also on 5 radio stations, 3 different states, from Albuquerque up to Las Vegas, Inland Empire, California, up to the Tahoe area in California. And I always have trouble saying Tahoe. Where is the station exactly up there in that area, Daryl?
To the city of South Lake Tahoe.
Okay, and the
Right
reach.
near,
The reach is Nevada and California, right?
Yeah.
Okay, excellent. Okay.
It reaches up to Carson City in Nevada, and in California goes to Placerville.
Excellent. Well, thank you very much. I appreciate that. Occasionally we get a couple of people up there, Julie Keisner and Daryl Woodworth, who are both excellent realtors and loan officers up in that area. They work for Malibu Funding, and she works for a real estate company up there, which I think it's Compass Realty, but I'm not quite sure, as the reach by which we can help you if you do call. And by the way, if you do call the company Malibu Funding, who I work for, I'd be happy to talk to you. And you go to the website, www.malibufunding.net, and see about 35, 40 different loan officers. There's way more than that now, but we've had COVID constriction in terms of our website use, as we have just not had the resources human-wise, because we've been so busy doing loans. Loan business is very busy, as everyone knows. So what is going to happen next year when rates go up? Now, I say rates go up. Do I know the rates going up? No, but I can tell you that one fee is going to go up December 1st. It's called the adverse action fee. A guy named Kimber White, who is the president of the National Association of Brokers, had some information on it. Everybody knows that this fee is coming. It's been supposed to happen last month, November, but it got pushed off to December. It's going to add about $1,500 per average per loan, and it's going to go right to the bottom line of what you, the consumer, are going to pay. So if you have a chance to lock your loan, do it before December 1st, okay? Because anything after that is going to incur this fee. But Kimber White from the National Association of Mortgage Brokers, what does he say? He says the half percent adverse market fee. That's what they call it, adverse market fee. What is an adverse market, Daryl? Do you know?
I don't really know enough.
Exactly. They use a term in and of itself is confusing. So you don't quite know how to question it because you don't really know what it is. It talks about the future when the real estate market tanks and the loans, some of these loans, become, the loan is more than the house is worth. That would be an adverse market. For instance, what happened in 2008 when real estate values in a lot of areas went down 20, 30%, in some areas 75%. That's an adverse market. Instead of saying this is an insurance fee for when the market tanks and you got to pay it, that's a real description of what this is, okay? But they don't look at it like that when they're when bureaucrats look at the way to describe things, they come up with a term that's confusing. Well, it's not confusing to you now because you know what it is. He says, the proposed capital rule requirement soon to be added by FHFA on all loans issued by Fannie or Freddie will have a direct negative impact to consumers. Again, why do they talk like that? You can't say have a direct negative impact. You can say it's going to cost you $1,500 at least, more than you would have paid last month. That's something I understand. 1,500 smackaroos. Yeah, that's right. Right out of your pocket into their pocket. And what are they going to do with the money? Now we know, and if you've listened to the show, the Treasury, the U.S. Treasury, which issues the 10-year bond, okay, which is a direct effect on you because that's what dictates the mortgage interest rate. We know that the Treasury each and every quarter takes all the profits from Fannie or Freddie and puts them into the Treasury. FHFA, which was the Conservancy Group, department, commission, regulatory arm of the government, which was put in charge of Fannie and Freddie. Those are the people that buy the loans from the government. That group is now going to institute a $1,500, let's say on average, fee on every loan that they are going to put in their coffers. And then every quarter, the Treasury is going to come in and take that money away. So if this isn't a tax, I don't know what is. This is not some futurized thing that they're going to stuff away. And I don't know if you, Daryl, you remember the lockbox, the Social Security lockbox when Gore was trying to run for president?
Sure do.
Oh my gosh, anybody that doesn't know, that was the buzzword for the 2000 election. It was the Social Security was going bankrupt, which, by the way, it's already projected to be doing again. They're trying to come up with some fix, and I don't know if you watched the current president-elect talk about it, but there's never been solvency for this because everyone keeps dipping into that Social Security fund when the economy goes bottom up, right? So in those days, when that was happening with Gore, the lockbox, everything, we're going to put it in a lockbox, meaning you can't touch it. Well, that's kind of what we're not doing now. This money that is the $1,500 that's being taken from you is being put into some place, but it's not a lockbox. No, the Treasury's going to sweep that away. Now, FHFA has said under Calabria, that we want to set both GSEs off. They want to release them from conservatorship. Part of that is to build up a reserve. Now, if this $1,500 plus whatever the Treasury has been sweeping is now not going to be swept into the Treasury anymore, and they need to build up a cash reserve in order to release the GSEs from federal conservatorship, I'm all for it. Now, the one thing that's going to happen is uncertainty about that with the new administration coming in. I think it's the new administration anyway. There's no indication that it's going to be anything different. So with that in mind, let's get to some of the other issues happening in the mortgage world. We talked a lot about the macro going on. Let's talk a little micro, okay? So the interest rates. We went to interest rates a little bit earlier in the show. We want to talk about the refi. Right, we talked about that. The forbearance. Okay, let's talk a little bit forbearance. The forbearance loans, as everyone knows, is when you couldn't pay your mortgage because you just lost your job. And anybody who's in forbearance right now knows that if you want to take advantage of these low rates, you have to either bring your mortgage current or pay at least 3 months in a row. Pay your mortgage current, pay 3 months in a row in order to take advantage of the low rates and do a refi. So we had at some point 4.5 million thereabouts people who were in forbearance, couldn't pay their loans. But the trouble with this number, and the number, I'll just tell you what the number is today, 2.735 million, 5.2% of the 53 million active loans with Freddie or Fannie. But that number, like the COVID number, it does not take into account people who have exited or are exiting or who have their loans up to date. They filled out the forms to go into forbearance and never did. They're added into this number. The COVID number is like that too. The 10.5 million people who have COVID does not subtract out people who have had it and have recovered. So that number of people who have COVID today is quite a bit less than it would be. This is a cumulative number, not unlike what it is with the forbearance number. And so when we're talking about, can you hear that, Daryl?
There was some sort of a weird noise, yeah.
Well, what was that? It sounds like it was a message from high above telling me to stop doing what I'm doing. It's very funny.
No,
Anyway,
so
I don't know either.
People upstairs like what you're doing, man.
Yeah, excellent. You see, that's it. I've put them to sleep many times, and so they need that ability to be able to listen to some financial guy talk about mortgages and get a good night's sleep. Those two things go hand in hand. Let's talk some about the builder confidence level. By the way, this builder confidence level, which has been around about 35 years, is out from the National Association of Home Builders. It talks about the sentiment of what's happening in the builder business. Well, they have hit their all-time high. Their number is 85. The 85 number reflects the percentage of home builders who are optimistic about home building in the future. I think home building is the number one problem with homelessness, and homelessness is the biggest drag on small to medium-sized cities, big cities too, but big cities have bigger budgets. Small to medium-sized cities are overrun with a homeless population, and I think there is an answer to it. One of the biggest answers to it is, hey, we got to build more housing, and we got to build single-family housing, and we've got to build more of it so that there's more on the market so that the prices stabilize, and maybe we can build enough of it so prices actually come down. Usually we wait for a recession for prices to come down. And what happens at those times is we get hawkish people who get into the market to make money, as opposed to looking at this as an opportunity by which we can buy low to sell low to people in lower income to be able to have a home to live. There's so many people out there in need, whether it's veterans, whether it's mentally challenged people, whether it's people who need just the help. They lost their job. Like this 10.5 million people number that people throw around, it's more like 15 to 20 million people who are out of work. Where are they living? How are they getting by day to day? They have to be able to have cheaper housing, affordable housing. They say affordable housing. I'm just saying what it is. You can't pay $3,500 a month for a single family home in Los Angeles. You got to be able to spend $1,500 on an affordable home in Los Angeles. They don't exist. So where do those people go? Anyway, I'm Jeff Barton. Food for thought. Thanks for listening to the show, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.